Chapter 6 focuses on another strategy I've used pretty much since I first started trading. Buying OTC multi-day breakouts. Earlier in the DVD, we went over the concept of basic support and resistance on charts. And really all that buying multi-day breakouts is buying a stock as it is breaking past a key resistance point on the daily chart. This doesn't necessarily have to be a stock breaking the new 52-week highs. It could just be breaking above a key resistance level that's lower, as long as there isn't any overhead resistance nearby. I don't want to be buying a key resistance break if a few percentage points later there's another major resistance level, something that could possibly stuff the move. So I do make sure there's plenty of room for the stock to spike. Back when I first started trading these, I really was looking mostly at just pump and dumps. But now it doesn't really matter. I treat all OTCs like they're pumps. Whether it's random momentum pushing it or a newsletter, I'm treating the chart pretty much the same way. The one key thing though is that there has to be good volume. That prerequisite still remains for this setup. There needs to be liquidity, it needs to be tradable. I don't care how great the chart looks, if there's no volume there, I'm not going to bother with it. And while some breakouts do have pretty large moves and really can run crazily, I've seen some go 100% or more, I usually don't make it that long. I'm usually holding for a smaller part of the move. I've never been very good at figuring out which breakout is going to be the one to run 100% or which breakout is going to go 10% and fizzle out. So generally I'm taking the quicker part of the move, holding for maybe a day or two tops, and then I'm done. One thing you might have seen me note on the last slide is that I like there to be at least one red day between the two highs when I'm buying a breakout. Basically meaning I feel like there needs to be some consolidation in there on the daily chart. So what do I mean by multi-day? What do I consider to be a multi-day breakout? Let's look at this COCP chart as an example. The bottom left chart here is the daily chart of COCP. You can see that we have pretty much a double top in the 112, 113 area. And as it breaks past that, that is where I see the multi-day breakout. It's had plenty of consolidation days in between, plenty of red candles. Now what I would not consider a breakout is the next day. Yes, the stock gaps up. Yes, it's above the previous day's high of 125, but I don't consider that to be a breakout again. I still think of the breakout level as being in that 113 area. Yes, the stock is reaching new highs, but I would not treat it the same way on that second day. To the right here is an intraday chart of COCP on that second day. And just to further the example, I've been in a lot of chat rooms where I've seen people talking about the stock, and let's say COCP here ramps up in the afternoon and breaks past this high of 147. Again, I'll see a lot of people say, oh, COCP, it's a breakout because it's reaching new highs on the chart. And just again, I want to emphasize that is not something I'd trade the same way. That's not something I consider a breakout. Yes, it's breaking the high of the day, so it's breaking out intraday, I guess you could say. But still, I don't lose sight of the big picture. I don't lose sight of where that 147 level really is compared to the major break level at 112. The risk reward really shifts the higher and higher the stock gets. Because now this breakout, as some people would call it, is happening 35 cents above the real breakout level. And eventually this breakout's going to fizzle out and OTCs can crash very hard. So you're opening the door to getting stuck in a big panic if you're buying into strength later and later and later into this run-up just because the stock is still reaching new highs. So don't lose sight of the daily chart. Don't lose sight of where the consolidation is and where the main break level is on the daily chart. So now let's look at some breakout charts for OTCs and just talk about them a little bit and where I see breakout levels and really how I would treat them. Starting with ECRY, this was a stock tips promotion. We talked about this earlier in the DVD. And ECRY, this first breakout here past the 38 or 39 cent area, this is one I probably wouldn't have bought because even though there was some red candles, there was some consolidation, it fell very hard off of its highs. It went from 38 down to about 18 cents or 17 cents. And then in 3 days came all the way back, basically 3 straight green candles, no pullbacks, and it had to double to get back to that breakout level. So I would have been nervous buying that break past 38 or 39 because I would have worried that it came too much too soon. But as it turned out, that was a decent breakout. It did spike up to about 50. And then the next day it put in another red day, another red candle, before gearing back up and having this second breakout here now past the 50 cent area. Here's HEMP. And HEMP, the main breakout you can see here, is through this 10 cent area, just under, where it was a nice slow consolidation and build up back to that level. And then once it busted through 10, it really sped up. and really got going, it more than doubled. It almost tripled, went to 34 cents after breaking through that 10 area in 3 days. So this is an example of one that worked really well, and there were some huge gains possible, and it really was scalable too, because it was trading over 200 million shares per day during this breakout. MJNA, here's another example, and this one extends even a little further back. You look back on the daily chart and you see a couple spikes that topped out in the 25-cent area, and then in early 2014, a third spike, again topping out in the 25-cent area, before it finally grinds up and breaks through 25, and then you get a few straight green days. This got all the way up to high 40s before finally crashing and coming back down and fading. PGLO, here's another stock tips promotion, and another beautiful breakout in the 45-cent area. PGLO, another example here where, yes, it broke out past 45 and it continued for 4 days before finally crashing. But every single one of those days where it reaches new highs, I don't consider it a new breakout. I'm not buying it again and again and again every time it reaches a new high, because it just gets further and further extended past that 45-cent area. And then when the wheels come off and it crashes hard. You can see quite a few breakouts on this PVCT chart. The first breakout being in this 160 area. And then after putting in a red candle and consolidating for another couple of days, it broke out again past the 250 area. And that breakout was a little weaker. It still got all the way up to 3, and then pulled back and consolidated for another couple of weeks before finally breaking out a third time past that $3 area. But what all these breakouts have in common is they're reaching new highs, but also there's a decent amount of consolidation on the daily chart in between each breakout. We get that red candle in there that kind of resets the chart, forces it to consolidate a little bit. Here's TGRO. TGRO is another stock tips promotion. Same sort of thing. Puts in a high at about 65 cents maybe, and when it finally breaks out through 65, had a really nice squeeze up to almost $1.60. And these big squeezers like TGRO, these are the ones where I would never still be around on day 3 or day 4. I don't have that kind of patience. I can't hold like that. But I could possibly ride this from 60 up to 75 or 60 up to 85, something like that. And it doesn't sound like much, but percentage-wise, those are very meaningful gains. BIZM was a promotion from back in 2013. You can see the first breakout past the 330 area maybe, got as high as 450, and then it did pull back and was starting to consolidate and build back, and then it actually got halted at this point, so we never got to find out if it was going to break out again past 450. And finally, here's just an example where it's not reaching new all-time highs, Fannie Mae. In May of 2013, Fannie Mae got as high as 540. And then slowly built its way back after that. The main high you see here is in November, around that 350 mark. And after a few months of consolidation, it breaks past 350 and starts to spike back up. Now it's not all-time highs, but there is no key resistance level between 350 and that 540 high from back the previous May. So that's just some general examples of what I'm looking for in the daily chart patterns. And right now it looks like the simplest thing in the world, because I'm showing you some examples that worked out pretty well. And also, you're seeing all this information in an instant. In reality, these breakouts take days to run. Some of the ones like TGRO spike for 4 or 5 days. Some of the other ones only have a day or two of spike after they break out. But you see all that information when you look back at these charts in an instant. And that's what makes trading so tough, is because you buy a breakout and you're not instantly a couple days later and up a lot of money. You have to sit through the grind, you have to sit through the pullbacks, you have to sit through all the consolidation. And that's the hardest part of this strategy, is because when you're sitting and waiting and letting it develop, that's when emotions kick in. That's when greed and fear and all that stuff kicks in and really influences your plan. So you have to go into these trades and you have to go in with conviction and know what your goals are, have a plan of what part of the move you want to try to capture, and then stick to that plan for better or for worse. So that is how breakouts look on the big picture, but now let's take a little bit more of a look at the part of the play that I'm usually involved with. Like I said, generally I'm out of these things pretty early. I don't make it past day 2 very often. When it comes to actually buying the stock and buying the breakout, I'm trying to buy into strength as the stock is breaking. I don't like buying into strength very often, but this is one exception that I will make because I think it is such a powerful move. Trying to fill into strength on an OTC is not easy, and a lot of times I won't get a full fill. So what I wind up having to do is wait for dips to try to fill the rest of my position. Sometimes these dips are going to dip back down below the breakout level. Let's say I'm buying a stock where the breakout level's at $1. There will be times where the stock will spike to maybe 105 and then pull back into the 90s. And that's scary to a lot of people. People think, oh my gosh, the stock is in trouble now because it didn't hold the breakout level. But what I've found in my few years of trading these is that it's actually pretty rare for the breakout level to hold perfectly. So that dip, it doesn't scare me out. It doesn't make me sell in most cases. Usually I'll see where that dip bottoms out, and then I'll adjust my risk later after some consolidation to get out if that level starts to break down. But before I even have that support level established, I'll be looking at earlier intraday support points on the chart and risking off of that. Those are the two areas I'll look at if I'm trying to figure out if a play is going wrong and if I need to get out. If things are going well, if the stock is closing strong, if I decide to swing it overnight, typically the next day I'm looking to get out if the stock is about to go green-red, or maybe if some key support level is snapping in the morning. What I want to see after swinging a position is a nice gap up the next morning, the stock staying green after a little bit of dipping, and then hopefully ripping and giving me a really nice morning spike. What I'm going to show you now are a few intraday charts that I saved from back in my first months of trading, back when I was first getting going and I was playing awesome penny stocks breakouts. 8ERN is the first one, and I had the little lines on the chart here. The breakout, it looks like, was just above 8.5 cents. And this is an example of one where it perked just above that breakout level, and then for 15 or 20 minutes it faded and it was back down in the mid to low 8s. And it really wasn't that big of a dip, but still, point is, it did not hold that breakout line perfectly like a lot of people expected that it would. I just included this one to show you that it doesn't always have to be perfect. And the next day there was a nice gap up and there was a nice spike up towards 12. This basically was almost a 50% move in about half a day of market time. Another good one to look at on the intraday chart is POTG. Eventually POTG made it much higher than this, but this was just the first breakout it had. Breakout was in the 28 cent area. That first day it spiked up to 36 after breaking out, but then it had that really hard pullback into the close. It closed down around 29 or 30 cents. And that's what I'm talking about when I say these things don't happen in an instant, and you have to sit through moves like this if you want to try to be patient. If you're sitting in a position where you're in on a breakout and you're up nicely, are you really going to be able to hold through a dip like this? I know that for myself, it is very hard for me to, which is why I usually try to pay myself into spikes along the way, because I don't want to get shook out into the weakness like this. As it turned out, the next morning, POTG was fine, and it gapped up, had another nice spike, reached new highs up towards 38 cents. One last example, CRWV. This was by the promoter Penny Pick, who also was affiliated with Awesome Penny Stocks. Just one more 5-minute chart here to show you an intraday example where it's breaking past the 7.8 cent area. In this case, it held the breakout pretty well. So I talk about how sometimes you don't always fill into strength. Well, I might try to fill into some of these dips as this first couple hours, it just kind of grinds and consolidates before speeding up into the coming days. So if I don't get my entire fill as I'm trying to buy into strength on a 7.8 break, yeah, these dips are a good option. But everything always looks easier in hindsight. Like I said, whether it's intraday, whether it's daily, you're seeing all this information in an instant. It looks very, very easy when you know what the ending is already. So let's dive into some live trade examples where you can see me trying to trade these things in real time where I don't know where they're going to wind up. The first example we're going to take a look at is AEMD, one of the more straightforward breakout examples you'll ever see. On this chart up here, you can see that back in October, AEMD had a sudden volume burst, probably press release related, and it spiked all the way up to 30.7 cents. And again, I really don't care too much what the story is. I might look just to know, but I know with OTCs, it's really just all hype, and I don't want to buy into the story. I don't want to get excited. I don't want to become a sucker for the company. So I really just play the charts and the price action. And so we have this 30.7 high, and then a month of consolidation where it had dipped back down into the 20s and even below, back to the teens, and then slowly been grinding its way back up towards that 30 mark ever since. And today, it had this little spike on a press release after 11 a.m. up to 29.7, and we had a perfect double top up there on the intraday chart. And now after some time of consolidating and basing near 28, we're building back up and we're getting ready to test that 29.7 high. So I'm looking to play this here. This is kind of a couple different plays happening at once. It's right now about 3 o'clock in the afternoon, so we're looking at an intraday high of day breakout if we do get this 29.7 break. And then also that 30.7 resistance is right overhead, and I think there's a really good chance that if we get through this 30-cent area, that probably triggers the daily chart breakout as well, and we have a really powerful mover heading in tomorrow in a really nice big picture time frame breakout. So right now I'm just letting it consolidate and I'm just waiting because I don't like buying in early on these. I don't like anticipating. And yeah, I could get in some right now and just risk it off that 28 level that's been holding all afternoon. But that's not really my style. I like to aim for higher odds plays. So I'm going to be patient and I'm going to let it perk up and get going here. And I do put in my first buy order here at 29.5 for 50,000 shares. I route it to Citadel because there is a 25,000 share Citadel seller. And so I'm hoping that matching it up will help me fill. In this case it doesn't. I still only have 2,500 shares. But I'm going for 29.5 because there were a couple market makers there on the offer, and I figured that it would get spiking once that broke. And now we're testing the 29.7 level. And that is of course the high a day. So I go ahead and I put in another order here too. And you can see I route to a few different places. I just throw in 3 orders there for 50,000 shares, and they're all at 30 cents. And again, I'm buying because it's a high of day break here, but also because I'm anticipating that this down the road is going to lead to that 30.7 cent daily chart breakout. And these are the moves where into this strength, I mean, you can see there's a ton of sellers on the level 2 here between 29.9 and 30. So I'm not entirely convinced that this is going to break out into the strength. I wind up long 130,000 shares from a 29.88 average. And I'm still waiting to see if 30 cents is actually going to break out or not. And once I'm building into this long, once we got this high of day breakout past 29.7, I'm using that 28 level as my risk. Like I talked about earlier, I could have bought into the consolidation using 28 as my risk, but now that we've actually broken high of day, in my mind that makes it much higher odds for this big picture move to work, and less of chance that I'm going to actually hit that 28-cent stop and have to cut my loss. So I'm pretty happy with where I'm at right now. My size is reasonable. It's very under control. With 130,000 shares from 29.88, I'm risking basically 2 cents a share here from where I would have to cut my loss if it broke down and stopped working. And that's a $2,600 loss for me. So that's really not that large in my mind, and that's a loss I can live with. And because I keep my size under control here, I don't get panicked out when 30 cents is failing to break here the first time and the offer downticks to 29.9. I'm not getting shaken out by these little dips. And I think that's a problem a lot of traders run into, is they just throw all their size in, go all in when they see a move they like, and then these little shakeouts get them out. And sometimes I fall into that too, but in this case I did a good job and I managed to keep myself comfortable. And so I could stay patient, sit back and watch the setup and just give it a chance to work. And since 30 is a nice round number and it just topped out perfectly there, I am also thinking about adding or trying to add a little bit as we get a break past 30 later this afternoon, if the chart does happen to work. And so our bid starts to build back up a little bit. We've got a couple guys in at 29.9 now. We're back to that 29.99 offer and 30 offer. It's just pretty stacked up here. And like I said, I'm just kind of sitting on my hands here and waiting until that 30-cent level gets chewed through or that 28 level breaks down. And here we go. We start to speed up. We start to break past 30. That ask gets eaten away and we uptick. So now, even though we're through 30, I don't necessarily want to buy quite yet because that 30.7 resistance is still overhead, and I want to see how the stock reacts first. And we sped up the action here. I just want to zoom through this next minute or so, which is really about 15 minutes of real chart time. But we get into a grinding pattern here where even though it's not over 30.7 yet, it's just chopping around and going sideways. And this is where little things like level 2 can really work against you. Because like I said earlier, I use level 2 mostly in times of volatility. And if you try to use level 2 here, where it's just doing little dips, like it might go under 30, or there's just a little movement here or there, but it's basically in a consolidating pattern, you lose focus on the big move, and you get shaken out. So what I really was careful to do here was to focus on the big move, take a step back, maintain that 28 cents was my risk, and I was okay with the stock weakening or pulling back again. I didn't want to get shaken out, basically, of my position. I was willing to use the additional risk in order to stick to the bigger picture move. And here, after that period of time of consolidation, we start to perk up. We've just been about 15 minutes where we haven't been able to break past 30.4, and now you can see that the level 2 is building back up. The bid is very, very thick, protected inside of 30. The ask is very thin, and it looks like we're about to perk up and head towards new high of the days and probably test that 30.7 area, which is that 52-week breakout level that is also important. And here's 30.4 getting tested, and I decide just to put on a small piece in addition to my position. I add myself another 20,000 shares. I get up to 150,000 shares total, and now I am ready to just sit back and go for the ride and see if this breakout can really get moving. And as I'm watching here, it's still a little slow. And again, this is still even sped up and it looks slow, 3 times speed. So in the moment, it can be very, very hard to stay patient, and that's why you need to know your goals going into the trade and know exactly what you're looking for and what you expect. But this is a setup that I believe in. This is a setup that I think will work the majority of the time. So again, while it's slow here, while it's not really going anywhere, I'm okay with just sitting back and being patient. It's all about giving it some time to work. And that is one of the things that can be so hard about trying to learn from video lessons or trying to learn with hindsight, is you look back on a chart after the fact and you see all the information in an instant and you say, oh, well, it was a breakout, of course it ran. But in the moment, when you're only a couple tenths of a cent above the breakout level, it feels like something is wrong. Because you're not looking back at a few days of action anymore. You're in the moment and you're saying, well, this is a breakout setup. Why isn't it running? I know breakouts should run, but this isn't doing it. That's where our risk comes in. And that's where we say it's okay to be wrong. And it's okay if this does tank back down to 28 and we have to cut our loss. Because it is a setup that we believe will work the majority of the time. And again, we're kind of stuck in a sideways channel here, not a whole lot going on. And it's another instance where level 2 really isn't all that helpful. We're just trying to play the big picture and play the chart more. But now we get another uptick. We're at a new high of the day again, and we're starting to test that wall at 31. And there we go. We pushed through 31. And that thins out pretty quickly right there, because we basically go straight from 31 up to 32. There's no real sellers on the offer there. And we're starting to see the action speed up a little bit into the close now. And it only takes a couple of minutes, and now suddenly we're pushing through 32 as well. So now this breakout is starting to really work for us. And you see here I throw in a small order for 25,000 of my shares through Citadel at 32.15 and another one at night at 32.15. I'm trying to downsize a little bit into this speed up push because we are nearing the end of the day. And when it comes to being long an OTC overnight, I don't really want to be in that large, because in this year of trading, halts have been higher. So even though I don't necessarily expect one here or have any reason to think that there's a risk of one, I want to be cautious. I want to downsize a little bit. So far though, I haven't really been able to fill. I've filled 1,200 of my shares. I was trying to sell 50,000. And the rest of my first order executes, so now I'm out my first 25,000 like I wanted. And I throw in another sell order at 32.4 through NITE. And there's still 10 minutes to go till the bell. I'm not incredibly in a rush to get on my position, so I'm not going to smack the bid. I will try to be a little more greedy in my exit. I've already canceled my order because I got jumped in front of by the 32.35 seller. So I'm just going to make sure that before the bell I'm out my last 25,000 shares that I'm trying to sell, and then I can keep that remaining 2/3 over the weekend. And since this is a multi-day breakout setup, it is big picture something that I expect to continue running on Monday. Probably a gap up and spike in the morning is what I'm anticipating. So you may say, why sell at all if you're expecting a gap up and a spike? And again, it's just to lock in some profits, to take a little risk off the table. Just in case I'm wrong. And as we uptick, and as it starts pushing through 33, I decide I won't sell instead of 33. I'm going to try to sell outside instead. In fact, I go back and forth a couple of times here. I'm just trying to pick the best exit point as possible for this last 25,000 shares. At the end of the day, we're talking about a difference of probably $50, so I might be being a little bit too particular here. And we're running out of time in the day, so I put my sell order in at 32.8. There's a couple market makers at 32.8 or higher, so I figure I'm going to sell. And I go ahead there. I've filled most of my order. I'm down to my last 500 shares that have to fill. And I'm out of that order right before the bell. And now I'm ready for Monday morning with 2/3 of my position left, looking for a gap up and a spike to sell the rest into. So now fast forward to Monday morning, and AEMD, I was right, it's gapping up. It's already 36.5 by 36.6, the bid-ask spread. And I do want to watch the first.
I want to interject here. I want to say that he's not always looking for a gap up and a spike. However, the stock breakout was at 0.307 and it only went to 0.33 and it had potential to run at least, somewhere between 7 to 10 cents in his mind. So, of course, he's going to have to hold it overnight. But that's not what he's looking to do every time. If he had bought it and it just shot straight up 10 cents, well, he would have or 7 cents, he probably would have locked most of his shares in. So I just wanted to interject right there because um, that's something that people confuse.
10 or 15 minutes or so of the open here in real time, because the open is a time that I consider to be more volatile, and it is a time where I will use level 2 a bit more heavily than I would otherwise. Before I was trying to trade the big picture and trade off of the chart, but now I want to try to be a little bit more precise and figure out when do I want to exit. This is a very large gap up already. We closed back at 32.7, and so we're already up over 4 cents a share from the previous close. So we could have a nice big squeeze at the open, and I'll be able to recognize that on the level 2 if it is happening, but I think that it's probably a little more likely that we get.
Also, want to mention these are OTCs, so that's why he's worried about getting filled. But I'm really showing you this because I feel this really breaks down how we trade the NASDAQs. And obviously, we don't have to worry about how you get filled on NASDAQs. And we'll show some examples on how it correlate here in a minute.
Some push, and then it pulls back and maybe gets closer to that green-red area. So my plan is I want to be selling into strength this morning, and then on a big enough dip, I want to rebuy those shares that I sell with a green-red risk, because I kind of think that that green-red level is the level that is very significant and the level that signifies whether or not the chart is still intact.
And it's been also interjecting again. Uh, Many years, obviously. This video came out in 2015, so it's been about 9 years. Red to green level isn't really the main risk level it used to be. But now it's kind of like if a stock goes red, oh well, no big deal, as long as it doesn't go too far situation. Just a second. What?
So I'm just going to sit back and watch level 2 at the open here and see what I can tell and see if I can get a read on it and try to figure out where the best place to take off my shares is. And so here we go. The market is about to open. And immediately bidders start stacking up at 37 cents. And we get a fairly large bid in there at 37, a 208,000 share buyer. And like any other time I'm watching level 2, I'm trying to get a feel of how heavily the offer is selling. And we finally get our uptick there. And now it's just a matter of watching the spiking action and trying to see if I can pick a top. We have 6 market makers that are 37 cents or higher right now on the bid side. The ask is looking pretty thin. So I'm hopeful that this is really going to spike. And as I watch it here at the 37.4 area, suddenly momentum starts to shift. We see a lot of red prints coming in on the bid. So I sell half my shares immediately, because now I think that there's a chance we start to pull back. I keep the other half just in case. If 37 supports, it's going to uptick very quickly on air. So that's why I keep a piece. But it starts to look like 37 is going to crack, so I put in a sell order here at 37 for the remainder of my shares. And I'm hoping to get executed up here and then rebuy into this dip whenever it starts to bottom, based off of what I'm seeing on the level 2. So my order is sitting in there right now at 37, and I'm not filling. And that offer is stacking up. We got a few market makers at 37.02, so they're really pressing on it here, trying to sell it down. And despite sitting here for a minute now, I'm still not getting that fill. And in comes an ARCA seller at 37, showing big size. And when ARCA locks up the bid and ask like this, where they put their sell at the same price that the bid is or below the price that the bid is, it's very, very tough to get an execution. And we've only got one market maker left at 37 on the bid side. I still could fill into them. It's possible. But instead it down ticks and my order is left in the dust. But I'm not going to chase it down here. Because yes, it just cracked 37. That's not great. But I did lock in some of my profits already. And I don't want to chase weakness. We just saw how difficult filling into that was at 37 before it even got super weak. So if I couldn't fill there, I probably won't fill here until it's finally getting ready to turn. So I don't want to fill dead bottom as it gets ready to bounce. And this is still well above that green-red level. So I'm just going to let it dip, and I possibly will add some shares back if it does dip enough. Or if I do feel very certain that it's getting ready to reverse. But right now I'm just watching the action and watching the sellers come in. And it's opposite of what we were seeing at the open now. Now we have 7 market makers at 37 cents or lower trying to sell. And the bid, I guess there's still 5 that are 36 or higher. But it definitely seems like the scale is tipping a bit in favor of the sellers. And we're seeing some prints below the best bid at 36. There's an ARCA seller at 36.5 showing 200,000 shares. And we're still slowly down ticking. Now the one thing that I'm thinking through all this is we have been selling here for the past 5 minutes about. It's been about 5 minutes AEMD has been weak. And yet we've only really faded a penny and a half off of its high a day. That 38 print you see on the chart was kind of a phony print. I'm considering 37.4 to be the true high a day right now. So I do find it interesting that despite all this selling, it's really not going anywhere all that fast. And for a second here, it looks like it could get really ugly. Start to speed up in its fade a bit. But then very quickly, That big seller gets taken out at 36. Another seller at 36 gets taken out. This turns very, very fast. So fast that I don't even really have a chance to react. A night bidder jumps up. That's me, actually, at $35.99. I'm trying to see if I can get a hit on the bid side. I also throw a couple orders in at 36 trying to fill. But it just turns way too fast and I miss the fill. So I just cancel them all really quick. I'm not going to chase the rebound. But now that it's supported and it's turned around, I'm thinking it's going to spike right back up towards that 37.4 high and possibly break through and really start rushing towards 40. And now maybe we get that big morning spike that I was looking for. And it does get up to this 37.4 area. In fact, it breaks through a little bit. We get a print at 37.5. But the 37.5 area stays heavy. Some more sellers start coming in, and Arca seller comes in again. And so it pulls back. But now that's a second test at high a day, and now I'm thinking about this as being in a channel between 37.5 and 35.7. So a dip with a higher low is a possible buy in anticipation of it ripping through that 37 high and really getting going after the higher low. And I could use that 35.7 area as my risk instead of green-red like I was using before. And it ticks right back up and starts testing the 37.5 and really get going. I can slowly but surely I fill. He broke up through 37 gains. I've probably made about $8,500 on this breakout setup. My plan was if AEMD broke up through 37.5 later that morning, I would buy it. And as you can see at the end of day daily chart, we did get that breakout past 37.5. Unfortunately for me, I couldn't get a fill. So that's one of the risks I took when I decided to sell my entire position into the 37.5 push, because OTCs aren't always the easiest to rebuy, and especially if you're trying to buy it into strength. So it broke past that 37.5 and never really gave me a significant pullback, so I wound up on the sidelines having to watch the move because I don't chase spikes when I'm trying to buy. And in this case, I missed out on 10 cents a share of upside as a result, which was very disappointing. But that was with hindsight aiding me. You don't know in the moment during that consolidation period if it's going to be that stock that breaks out and has this 10-cent run, or if it's going to be the stock that breaks down and eventually winds up red on the day. So I traded it conservatively. I locked in over 20% in profits. It was really, overall, a very successful trade for me, even though in hindsight I messed it up and I left profits on the table.
Yeah, he made $8,500, so just one of those a week's all you need. Hell, maybe just one a month. But that's OTC, so right now we're not getting a whole bunch of OTCs at all. Matter of fact, we haven't had any for a couple years. We've only been able to trade the NASDAQs. But OTCs have made a comeback, so I thought this video would be good to watch, good to study. Now let's kind of fast forward to the rules of the NASDAQ multi-day breakout. CSA 620.
Keep running. Stocks now over to listed stocks. And Chapter 8 begins by focusing on buying major breakouts on listed stocks. It really is a similar strategy to buying OTC breakouts. A lot of the things I do are the same. I look for a daily chart where there's a major resistance level that's held for 2 days or more. I make sure that there's no other major resistance level somewhere close by overhead that could stuff the move. So I want to make sure that there's room to run when it's breaking past that key resistance. But the main factor I consider, and I do look at it more with listed stocks than OTCs, I want there to be very, very large volume compared to past days on the daily chart. And it also has to be one of the very volatile stocks for me. I'm really looking for the situations where there's a stock that had good news, had a big run out of nowhere, and then after a few days, set up for a second leg up. There will also be listed breakouts you'll see where it's just a nice slow climb up on a chart that has pretty consistent volume, and that's great. Maybe this strategy will work there too, but that's not an area where I focus. When it comes to trading these intraday, again, pretty similar to OTCs. Any time of the day, I will buy the breakout. It could be morning, afternoon, midday, whatever. I'm interested because it is a major breakout on the daily chart. But my one exception is I don't want it to be into a straight up spike. If the multi-day breakout does happen on a straight up spike, I won't buy it. Usually what I'll wind up doing is waiting for a pullback, waiting for a little bit of consolidation, and then if that new high can break again, then I'll jump in. If I do buy right on the breakout, I will set my risk based off of a prior intraday support. I'll find where an earlier dip held and I'll use that as my risk. And as the breakout develops, as we head higher and higher, I will move my risk level up as we go and as new support levels form. But in a lot of cases, I don't make it very long with these. I sell along the way into strength. I am impatient. On the long side of trades, I'm just usually not as comfortable. This multi-day breakout for listed stocks really is the only long setup I will buy for listed stocks right now, just because it's the only one that makes sense to me and it's the only one where I feel somewhat comfortable. But because I am a little skittish on the long side, in a lot of cases, I do not hold these long. I do not catch the entire move. Sometimes I don't even catch the meat of the move. But they're volatile enough that I still make good percentage gains. Let me show you some examples now of what these daily chart breakout setups look like, starting with CANF. CANF was promoted by a newsletter that actually pumps listed stocks sometimes, and it had a great spike on day one from 250 all the way up to 430 high. The next 2 days, CANF managed to continue holding up, even though people expected it to gap down, expected it to fade off. It still hung in there. And all 3 days, it had spikes that topped out around the same area, right around that 430. Third day, yes, it did dip red for a little bit, but it recovered and it still managed to close green. So we had this very clear resistance level here of the 420 to 430 area. And even though there is no red candle here, I still do consider this a multi-day breakout because it is multiple days of the same resistance level holding. Once we got the breakout, the result was 1 day of squeeze. Ripped all the way from 430 up into the high 5s before fading off intraday and closing in the 4s. It didn't run for multiple days, but it still was a great spike on that first day, a great squeeze, ran well over 30% from the breakout level. One thing I remember about this CANF play is that I was actually short before the breakout. I was short knowing about that breakout level, knowing that I had to cut the loss if it broke, and once it broke out and I ate the loss on the short, I did immediately transition into a long and I made back a decent amount of money on the long play. Next, here's RADA, and RADA, this is similar to CANF, where you had a big spike on day one with a big fade. It topped out about 330, closed well off of its highs, but that second day it still gapped up, it still retested that low 3s area, and here we have a pretty key multi-day level, 330 that's held 2 days in a row. Day 3, we busted through 330, got a really big squeeze, got all the way up to 6. Unfortunately for me, I was in no
That's what we call a day 3 surge, baby.
position to play this long because I was nursing a stubborn short. I somehow found myself short in the low 3s trying to play off of that 330 resistance, but when it broke out, I stayed stubborn. I wouldn't cut my loss, and I went on a crazy ride. At one point, I was down almost 6 figures on my RADA short. Instead, it turned out to be LAKE later, and we'll talk about that one later in this DVD. But point is, when it comes to breakouts, they're not only good for just buying, but they're good to notice if you're short a stock because it can save you from having to sit through a crazy squeeze. Not all breakouts are always successful though. Take a look here at ACHN. ACHN seems to fit all the major requirements. Had a big gap up and run out of nowhere a couple days in a row where it got up to 8. Had a few days of fade and consolidation after its high near $8. Had massive volume these 5 days compared to previous days on the chart. But down the road when that $8 breakout came, we really did not get any kind of a squeeze. Even if you had tried to be patient and give the breakout time to develop, it never really ran. So this is where the rules come in. This is where knowing where to cut your losses comes in. You'll see later in this chapter from my live trades that when I'm in a breakout that doesn't work, I usually take very small losses compared to the gains that I take when they do work and I am successful. And ACHN is probably an example where I would have wound up cutting it for a loss. Next up, let's look at DGLY, and DGLY is kind of unique because it didn't have just one big run, but 2 big runs that topped out in the same area. This first run back in July, the initial spike topped out near 950, and then the following day set a high that was just below that 950 mark. And then we had nothing but fade for a while, and volume dropped off, and everyone forgot about DGLY. Fast forward to August, and DGLY starts running again. Part of the reason DGLY was running was because it was in a very hot sector at the time. This was during the Ferguson shooting and the protests and all of that, and a big push for body cameras, and DGLY was running because it was a camera company. Its first 2 days of run topped it out around $9. It pulled back, and then started to build back up towards that $9 level again. So now we're not only playing off of this $9 level from this run in August, but we're also thinking back to July, the last time there was massive volume, and it topped out in the 950 area. Following day, DGLY broke out, got past that 950 area, squeezed all the way up to about $14 and closed at $12.50, and then the following day had a very large gap up and traded as high as 16 at one point. I unfortunately was on the sidelines for this one. I just watched it. I kind of froze up and was scared, but it was another example that taught me the potential of these breakouts. And DGLY, it wasn't even done there. After it topped out up in those 16s, we had another couple of days of consolidation. It looked like it was getting weak. It looked like it was pulling back after another red day. But then it had another big gap up, a nice green candle, set itself up again to potentially break out past that $16 area. And when that second breakout happened, we had 2 more days of squeeze, and we eventually topped out up at $33, almost a 100% run from that second breakout. The higher these things go and the more times they break out, in a lot of cases, the more twisted short sellers are going to get. The more times you're going to see stubborn shorts getting absolutely crushed. And that's part of the reason this last breakout squeezed so much. Is because all these short sellers that thought the move was ridiculous and had been stubborn for so long through the move, they finally get blown out on this last breakout. Breakouts like this $16 one on DGLY are usually the ones where I'm just too scared to play and I wind up missing it. Really just because there's still that small part of me that's afraid that it's just up too much. But like I said on the REDA example, even if I'm not using these breakouts to long, I can still know I sure as hell don't want to be short if one of them come around. On to another example here, ROSG. ROSG has the crazy volume out of nowhere, a triple top around $8, and although there is overhead resistance here at about $9 on the daily chart, if you look back a little ways, there was no volume traded on those days, so I'm not really all that worried about it. I'd be a lot more concerned about that $9 level if these 2 days had traded major volume, but they did not. One thing to note with ROSG here is after its big first run where it topped out just under 8 and then 2 days of consolidation, the day 4 it had a big gap up and its spike actually looks like it did top out just above $8. So it did get above that day 1 high. And maybe that's a move I bite on. Maybe that's a play where I do take a loss because it did get stuffed and it did fade back into the close. You can tell by the candle there that the closing price was down in the 7s or high 6s. So closing that far off the breakout level, I'm sure that I would not have still been holding overnight. But when this sets up again, when the following day, it gaps up a little bit, spikes up, tops out just under 8 again. Basically, I can use that day 4 high as my new breakout level. And it still pretty much looks like a triple top on the daily chart. So the next day, when we break past it, I can try again long, and this time it works absolutely insanely well. Gets up into the 24s 2 days later, and then eventually has that big fade on day 2.
Alright, y'all, so I let you see the live trade example of the OTC because I basically think that's the way you should play it. A clear high day break with a clear risk that's pretty close to the daily chart breakout level. And if it doesn't break out that much, but holds above the breakout level into the close, probably swing some. Ideally, you've locked some in, so you're safer to swing. Or if it just takes off to your target day 1 of the breakout, then you sell it all. So, hope everybody enjoyed this study session. And yeah, of course, everything goes out to Tim Grattani here, and there's a ton more of stuff in this DVD. This DVD is like 15 hours long, and you just saw maybe 30 minutes. So, yeah, everybody, here's Tim Grattani's take on the multi-day breakout from 2015, and it's just as valuable information today as it was 10 years ago. All right, everybody, take it easy.